Hello and welcome to the Infinite Financial Freedom Podcast, where we empower you with financial literacy and guide you on your journey to financial freedom. I'm Josh Mettle, and today I'm joined by Ramon Casaus, a powerhouse real estate entrepreneur, investor, and founder of ROC Real Estate Partners at eXp Realty. Starting his journey as a rookie agent in New Mexico, Ramon built on one of the region's top producing teams. He now helps agents across the country scale their business through mindset, leadership, and systems. We are definitely going to get into all of that today. And his journey from solo agent to founder of a fast-growing real estate empire is really one that I think every aspiring entrepreneur should hear. So, Ramon, thanks for being here with us today, my friend. How you doing?
I'm doing good, man. I'm feeling great. Thanks for the intro. I am not that cool, but I will go with that. I love it. I love
I
it.
always love when people read a bio for me. I can't help but, smile in the back of my mind. And I'm like, man, if people only knew what a real shit show I was.
Yeah, that's what I was thinking. Yeah, I was like, okay, okay.
Let's start there. I think that's a great vulnerable place to start because as entrepreneurs, as people leading very busy lives, right? Between running family and relationships and trying to take care of ourselves and running our businesses and trying to grow our business empire and all our investments. It's a lot, man. Like
Yeah.
it's a lot. So how do you find balance in that? And are you similar to me where you find yourself kind of constantly putting yourself out over your skis and you're like, all right, I got to slow down a little bit here or everybody's going to see the shit show going on behind the
Yeah.
curtains?
Yeah, very similar. I would actually say my team, we have a very, very transparent relationship, our leadership team. And they're more times than not the ones that tell me, hey, slow your roll, like one thing after
Totally.
another. They've all been working with me for quite some time. And so they're actually the first people to point it out and say, like, prioritize one thing after another, we'll get there. Because they know how I want everything done yesterday. So
Yeah.
yeah, I feel like that. I would say there's one thing this year that's been a huge focus of mine when it comes to, well, actually, we're going to talk about focus, but when it comes to balance and when it comes to clarity, and it's really focusing and being intentional about not being distracted.
Mm.
And what I mean by that is every time you check into your inbox, your email, your return phone calls, your text messages, your DMs, you're checking into somebody else's priorities and you're checking out of your own. Um, and on the flip side, I think that the hardest part about being an entrepreneur in 2025 is that we've never been more distracted in our entire lives than today.
Yes.
And
Yes.
a lot of that comes down to social media. And that's a whole nother topic, but that has been probably the singular largest, um, I guess you could say, focus of mine that's made the biggest difference in terms of finding that balance and clarity and not getting too in front of myself with all kinds of random ideas and things I want to do.
All right, I want to touch on two things here. I want to come back to what you just described, I would call deep work. I
Yeah.
don't know if you ever read that book from Cal Newport, but he talks about the difference between being all in and 100% focused and intentional and being scattered, and the difference in terms of your ability to execute. But before I go there, let's go to culture. How did you create the culture inside of your company that your executive team that look up to you have the ability or feel confident enough to say, "Hey, Ramon, slow it down, time out. Like I need you to, take it back a step. Let us finish what you gave us last week before we go to next week." How do you create that culture?
Yeah. It's a great question. I think and I've gone through the culture rabbit hole my entire career because I truly believe that outside of like code, that's one of the proprietary things that you do have a part of your business because you can't fake it, you can't buy it, it doesn't just magically appear one day. And so I think culture is super special. I would say first and foremost is actions are always caught, not taught. And so, first, whatever the culture that you want in your business, from the leadership down, specifically the leadership, they have to exemplify that every single day. And I think the flip side of that is also having the the purpose of your business, the mountain you're currently climbing, and how you plan to behave on that journey clearly defined and having core beliefs and philosophies that are ingrained and embedded into every decision that you make. So, for example, one of the things we talk about in our business is that it's a long game. And so our leadership team knows like if we're in this for the long run, it's better to get the foundation, do it the right way. Don't worry so much about speed, worry more about accuracy. Speed's obviously a factor, but let's do it the right way the first time because if this is a long game, it's okay. We have time to fix it. And so I think that's like an example of how culture can be utilized in variety of different decision making by the leadership team. Oh, I think you're muted.
It's always better when the host is not muted,
Usually.
by the way. That's lesson number 2 on today's
Yeah,
podcast.
yeah,
Thanks. Kudos to you for creating that light of where your company's headed and giving people the autonomy and the right to say, hey, time out. I find myself often running at such a speed that sometimes, as you said, the execution falters because I'm directing people in a new direction before they can execute on the last thing. It's
yep.
something that I have to continually remind myself of. How do you keep yourself in check? Like, what are the things besides your team saying, hey, you're out of bounds? What other resources do you use to stay united with your team and
Yeah.
not be running too far out in front of them?
Yeah, so a very, very clear 90-day roadmap that's
Got it.
issued every quarter. That has been the most helpful in terms of not getting over my skis, right? I wake up and I look at the 90-day roadmap. I go to sleep. Before I go to sleep, I look at the 90-day roadmap. That's what everyone in the company's doing. And sure, we have other ideas and we have other things, and those go into a category and then they're prioritized based on the importance for the next 90 days. And that has helped us really get clear on what do we need to do today to hit our timelines.
So company strategy long term, followed by company strategy for the next 90 days. And you stick to that 90-day plan, which pushes you towards the long-term vision. And your team has the right to say, Ramon, you're in the next 90 days. You're not in this 90 days. Let's bring it
Yes.
back.
We'll push that back. Like we'll get to that maybe Q3, Q4 90-day plan. And it also just depends on your business too. Some
Yeah.
sales cycles are immediate. In real estate, like a decision I make today on a change or something we implement, there's really barely even enough data after 90 days to truly say, did this even work or not? So like when we look at our sales cycle, that's why 90 days is still pretty short in the grand scheme. We've even thought about going 6 months on some of these, but
Yep.
it all depends on the business, on what type of business you're running as well.
Do you use EOS, the entrepreneur operating system, or what's the platform you use for your 90-day plan?
Yeah, I mean it's kind of one we've created ourselves.
Okay.
I'm reasonably familiar with EOS, and all that good stuff. But yeah, it's just more of a trial and error over, the last 8 years that we figured it out what works for us.
It's great. All right. So if you're a young entrepreneur or not so young and you haven't kind of figured these things out and you feel like you're swirling a little bit and getting out over your skis, this is absolute gold. So thanks for sharing it. Let's go on to the other thing you mentioned. You didn't say it this way, but what came up for me when you said focus was a book that Cal Newport wrote called Deep Work. And basically what he describes in that book is that there is a epic shortage of focused attention, deep work because of the distractions that you're talking about. And then he goes on in the book to talk about the number one asset of an entrepreneur or someone who is highly effective is their ability to block out all the freaking distractions, all the chaos, and just focus. And in this case, let's just say focus on that 90-day plan. Like, how do you move the company forward and simultaneously hold back all the chaos? And how do you do the deep work?
Yeah. Well, one thing that I learned early on is that there's a million things going on up here. It doesn't mean that I have to plant each of those into my leadership team's head as well.
Mm,
I've learned that I used to love to communicate vision and ideas. And what my leadership team feedback gave me is like, it's too much. Like you are taking your distractions that were not in our lives. And now, even though they know it's with good intent, it's not like I'm
right,
trying to
right.
say, do this right now. I'm just saying well, the possibilities, right? All the time. And I've learned to really space those out and really ask myself, does this really matter if they know this or not right now? So kind of gatekeeping all of the ideas that go on in my head, they don't need to trickle down necessarily straight to the leadership team.
It's great.
That's one. You know, the other is sharing and being super honest about what helps me stay focused and undistracted. I'm not perfect at it. And I think that that's something like as much as we work on our KPIs and the different strategies of leadership and sales, we also fundamentally look at like how do we put more time into your world? How do we make sure that you have enough time and focus time to work on these different tasks or things that you need to get done? A lot of it is like morning routines are very important and understanding like the psychology of why social media creates distraction in your world and how that inbox doesn't need to be the thing you check every 5 minutes. Like I share a lot of those things with our team. And again, a lot of us speak the same language in the company about those core philosophies.
So let's talk about morning routine, because when I think about deep work, the first thing I think about is like where does that fit in the day, and
Mhm.
where am I most likely to have success doing deep work? Because what I know is at 4 o'clock in the afternoon, I'm spent. Like my constitution is starting to waver from an energetic standpoint. There's all these distractions and things that may have gone off course in the day. My ability to focus and do really deep work at 4 p.m. isn't that great. I just know that about me. So how does morning routine fit into deep work? And how does it fit into you being able to say, distractions aside, I got to be head down right now?
I think there's deep work and then there's deep think.
Mm,
And work is tangible work, creating, building. I think outside of that, just even an hour or 30 minutes or 20 minutes of time simply thinking undistracted in complete silence about what it is you're working on, I feel like that gives me the indicators of what I actually need to do that day. Like because I'm thinking about one sole task or one sole list of the next things I need to get done in the next 90 days, that gives me the clarity to know exactly what to work on because I feel like sometimes the part of being distracted is not knowing what to work on.
right.
I think that's a hard part. It's like a paralysis by analysis, right? So the morning routine to me looks like getting up before the sun, whatever that means for anybody, but I'm more like a 5 a.m. person, 4:35. And my first half hour of my day is spent being grateful, praying a little bit, being kind of just silent and going through a little bit of mental rehearsal in my own head of things how I want them to play out in the future. And then it's pulling up that 90-day plan, no joke, and sitting there and thinking about it, thinking about my day, looking at the 90-day plan, taking some notes, thinking through the decisions that I'm going to have to make, and where I'm at in my overall 90-day plan. And then from there, it's going and executing. Um, Throughout my day, there's usually at minimum a 2 hour time block, and you said it, primarily in the morning, 2 hour time block that is solely for me because I know that like I can only give what I have. And if I'm not filling my own cup and I'm not taking care of myself and what I need to do, it's hard to focus on that at 5, 6, 7 o'clock. It usually doesn't happen. So there's always a 2 hour time block, but that morning part, like I want to make that distinction on the think versus the work. Like the deep work will happen, but sometimes the deep think is what gets you to the deep work because now you're truly inspired and know what exactly it is you're going to work on. And I think for me, that's been extremely helpful.
The deep think precedes the deep work.
Yeah, I believe that.
Yeah. So the other book that came up for me was Michael Gerber's E-Myth, and he talks a lot about working on the business versus working in the business. And as a young entrepreneur early in your career, and this goes true if you're starting your own business, or if you're in real estate, or if you're a dentist starting your own private practice. Early on, you have to do everything, right? You're the practitioner, you're the accountant, you're the marketer, you're all the things. The only way to get out of that is to build systems and processes and scale, and eventually hire people and train them and get some of those things off of you so that you can elevate and escalate and really operate in your genius zone, which the definition of genius zone for me is high return on investment, meaning these are high dollar per hour, but also usually high return on energy, meaning when I'm involved in this genius zone activity, 2 hours go by like 30 minutes, right? It's not taxing for me. So how do you think about separating working on the business, which in my mind, those are things that give you scale and enable you to scale the business? Could be a marketing plan, could be your 90-day execution plan. How do you separate, or how do you go about bifurcating, I guess, working on the business and in the business? And really what I want to get to is most people never get there, Ramon. Like most people can't do that, and they get stuck in reactive instead of proactive. So how have you been able to do that?
Yeah, I think one of the things that comes to mind is really dropping the ego. A lot of times we think that nobody can do what we do better than us.
Mhm.
And the reality is there's a lot of skilled and talented people out there that you can train to be as good, if not better, than you are. And I think that there's a lot of things when you're first starting out, you're doing simply because of necessity. You're actually not that good at them, but you're doing them because you have to. And then when you start ranking those in terms of dollar per hour, meaning like how much could I replace this task that I'm doing? Like what would this person cost me? You have to always ask yourself, is this a $15, $20 an hour task, or is this a $5,000 an hour task?
Yes.
And when you have those ranked and very clear, you just graduate up the ladder until you're doing only the 5,000, 10,000, whatever the number is, right? It's the highest dollar per hour tasks in the business. And usually those are the ones you're best at. And usually those are the ones that you enjoy the most. And so I think there's a lot of like logic involved with just whatever type of business you're in. Like sales is the lifeblood of the business. So there's a high probability in most cases you're going to be driving sales the majority of your time, and then bringing in people to outsource all the operational and administrative stuff. And then I think that again, going back to the clear vision about where you're going, if I bring, even if it's I don't want to use not the word low level, but just a entry level
Yeah.
employee into the business, and that's the only employee you have, or you have a couple of them, like, well, shoot, that's who you got. They need to know the vision of what you're building because they're a part of it now. And so I think there's leverage in obviously bringing in hires, but there's also leverage in explaining very clearly where we're going and why this direction is important. This is how I want you to think about your role, because the more autonomy you can build with those people, the more leverage you have. Like when you can create them into self-starters and proactive and coming up with new ideas and not just sitting there taking orders, you give yourself even more time back. And frankly, I think your business is better because of it.
Yes, absolutely. This is the easiest way for self-employed business owners to qualify for a home loan without the headache. If you're a business owner or self-employed, you understand that sometimes banks just don't understand our complicated income structures and can make it a real headache to qualify for mortgage financing. But there's a better way. We specialize in home loans specifically for entrepreneurs, using your real income, not your after-tax deductible income, enabling you to qualify for a home loan much faster than traditional banks. If you're dreaming of buying a home, don't let traditional underwriting guidelines hold you back. When banks say no, Neo says yes. Click on the link in the description below to schedule your complimentary consultation now. I want to ask you a question in a minute just to share a story about maybe somebody you've hired or somebody you've brought into your organization that's kind of changed everything for you. I don't know if you've ever had one of those
Sure.
hires where you're like, we're on a different trajectory because this person's part of our organization. But I want to put an exclamation on the previous thought process, which was when you're starting out as an entrepreneur, you have to simultaneously figure out how do I work in the business because you need that next transaction, you need that next sale, you need that next closing, whatever it is. But that doesn't give you scale. What gives you scale is creating systems,
Mhm.
processes, campaigns, marketing campaigns, and then eventually getting to the place where you can systematize what you do in the business so you can hire people to do those lower level things so you can elevate. And when you start out, you have to figure out where that fits in your day. For
Yep.
me, similarly to you, Ramon, my morning routine is very similar to yours. I'm up very early. My first 60 minutes is contemplation, meditation, and I'm envisioning where I want to go. We run EOS, which is the Entrepreneur Operating System, very clear rocks. Great name, by the way, right? ROC Real Estate. But
There you
in
go.
EOS, they call it rocks that you're going to accomplish. Those are milestones you're going to accomplish in the next 90 days. And I'm spending that first 60 to 90 minutes in contemplation, stillness. The lights are low. I have candles on. There's incense going on. Like it's a whole thing. It's like a whole ritual, but it
Yep.
is my thinking, envisioning time. And then I go straight from that into sitting down at my desk and I'm working on my business. I'm not trying to bring in another sale. I'm figuring out how do I get to the next 1,000
Yeah.
sales, right? I'm
Right.
building scale to my business. So
I
I just
love
wanted to
that.
put an explanation there because I think most people never get to that place where they work on their business enough that they can scale and get to the next set of questions I'm going to ask you.
Yeah, I love that. And one thing I thought that was important to mention is are mistakes.
Mm.
And some mistakes I've learned with hiring leverage it is that you need to put people into roles, not roles on people. And what I mean by that is that sometimes we hire someone because we need somebody, or maybe you have someone who's already working for the company and you want to reposition them. The biggest mistake you can make, where you're going to have to unwind it at some point, so you just got to know that, is where you take a person and you take a role and you put it on the person. Like, okay, now you're going to do this. Like, no, 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 no. This should be already defined, and then you go find the person that fits into this, not the other way around. Like, I don't know if that makes sense, but yeah, that's a big one.
100%. It's a huge one. There's an exercise that my coach taught me that folds into this that I'll just share really quickly. He requires us to track our time in 30-minute increments for 2 weeks. And that sounds super onerous, but it's really simple. I just have a notepad of paper and I have an alarm that goes off every 30 minutes on my phone. And I just write down what exactly did I do for the last 30 minutes. And it takes me 15 seconds to write it down. Like I'm just chicken scratching, podcast with Ramon, right?
Yeah.
And at the end of 2 weeks, you start looking down and you find patterns. Where am I spending my time that are low return on investment or low return on energy? And those things become the job description of the
Yes.
person that you are going to hire. So I already have a role for them and a skill set that I need them to take off of me before I ever write my ad. And my ad is a description of all the things that I want to take off of me because now I'm aware of where I'm losing my time on low return on investment activities.
And then you find the person who has the skill sets and has it's the ideal avatar that fits that position. Yeah, I love that.
And they love it, right? Like
And they love it.
ideally,
Yeah.
you want to take the things that are low return on investment and low return on energy for me. Like these things are draining me. I'm slugging through my day to get them done. But she loves it. Like she doesn't want to be on a stage. She doesn't want to be in front of people. She
Sure.
would love to just nurture and take care of all of these things. So I couldn't agree with you more, finding the person for the role versus putting a role on somebody.
Yes. Perfectly said. Yep.
Yeah, great. This is super, super valuable. Okay, so let's just talk a little bit about someone that you have successfully done what we just talked about with, and that changed the direction of your business. Because I believe you're one hire away from completely changing your business and your life if you get that right person to take those things away from you.
Yeah, I agree. The first one that came to mind is when I started my very first year in real estate. I didn't sell much. It's actually quite not a great
Shocker.
yeah, not a great agent at all. But my second year, some things changed, and I ended up selling just shy of 100 homes my second year in the business. But
That's
I
incredible.
yeah, in Albuquerque. Yep. I was only able to do that though because about midway, not even midway, a quarter way through 2017, I mean, I was doing all the paperwork myself and I was dreaming about counter offers. Like initials and paperwork. Anyone who knows me knows that's not my forte.
Low return on energy, Ramon.
Yo, man. I mean, it was like stressful because then you're missing a bunch of stuff. People are sending it back saying it's wrong. And I'm just like, oh man, and there was a transaction manager in my brokerage. I worked at a Remax when I first started, and we hit it off great. She started doing some work for me, and then I started understanding, well, hold on, I'm paying $400 a file. If I'm looking at my track record, I'm like, well, if I did 25 this quarter and I'm gonna do 100 maybe, let's see, I could just bring you on full time for like 45 grand and then you could do a bunch of other more stuff for me outside of just the transaction. So I pitched her the idea and she was like, okay, I'm game. It's like, okay, awesome. So I hired her full time as my first full-time hire. And that's what the trajectory of the bit, everything changed when I
Mm,
had the right person in the right seat who not only could do the actual paperwork, but could advise and consult the other agents that ended up joining about like how to negotiate and what to do in the deals because they didn't have to call me. They'd get an 80% of the answers they needed from her. And that singular hire is where we went from, no units the first year, 100 the next, and then literally almost 100% growth year after year, up to about 500 units. And it was solely because of that core admin hire on the transaction management side.
So I want to pull a couple of golden threads out of there. First of all, you didn't hire somebody like you. So you didn't think, I need another Ramon as my first hire,
The
right?
last thing, it's the last thing we need.
Right. Exactly. But that takes a tremendous amount of humility, really, to say, where am I? Is humility the right word? Maybe it's just self-awareness is the right word, right? Like, where am I weak? Where am I not winning? And then you went and found somebody who obviously already was an expert at that role. So you didn't, put the role
Yep.
on somebody. She was
Already
she was
doing it.
it, already
Yep.
doing it. So I think that's really important. The other thing is a question, really, Ramon. Do you think that in most cases, the first hire should be someone who brings order and is kind of like administrative that way rather than continuing to maybe hire a marketing person first or hire a second salesperson? Like, how do you think about that?
Well, at the time, social media wasn't that big of a deal and marketing wasn't that big of a deal yet. It was, but it wasn't, and especially in the real estate industry. I think it all just depends on who you are as a person. Like
Mm,
I've met brilliant team leaders that would rather stay locked up in an office with no windows all day long than go recruit agents and go get on social media and talk about their business. I've seen both work. So I just think it goes back to your comment about having some self-awareness about, okay, like what does the business need that I'm not actually good at? So for all intents and purposes, I could have been an awesome transaction manager and been super brilliant when it comes to organization. Well, then I need to go hire someone who can drive the business forward and go out and make sales and bring in revenue. So I think it just depends on the person. But in real estate specifically, service-based, sales-based, usually you're the person that is driving revenue.
hmm
And so you want to stay as crystal clear focused on driving revenue and outsource everything else. And logically, the bottleneck was not in marketing because if it was in marketing, we wouldn't have the sales.
Right.
It was in fulfillment. Like
Yep.
that's where we were weak. And I knew I needed to make a hire for fulfillment. And it's funny you said that. Marketing came right after that.
Yeah, so I think the distinction you made is really important. It doesn't have to be that the first person you hire is organization if that's your superpower. If
Yeah.
your superpower is organization, then perhaps you need to hire someone who's a superstar in sales or a superpower in marketing. But it's almost like you're hiring kind of the opposite of you, right? Like where are you out of balance? And that's what you're hiring for.
Correct. Yep.
Yeah.
Well said.
We recently in our real estate investment business hired a paralegal, and what's been astounding to me is we recently asked her, you know, are you having any fun? Because we gave her all the stuff that we hate doing. We're like reading a 37-page lease
Yeah.
agreement with Target, for example, right? Like, kill me. Um, and she's like, I'm having the time of my life, and I'm like, we did it. We nailed it. This person is better than us in those things, and she loves it.
Yeah.
And she's an example of a hire that completely is I can tell within 3 months, she's changing the entire direction of our business. So
Yeah. I, I
great.
love I love that question. Are you having fun? I think
Yeah.
that's like that's what I took away from that is like, am I asking that enough to our people? Are you having fun? That's great.
You know, I have a theory about business that it's just a way for adults to play games. You know, when we were kids, you know, we played jump rope and dodgeball and you know, we would have been out beating each other up on the baseball field. As adults, we want to have that same level of fun. It's just a different game. And so I try to bring that to our teams, you know. It's gamesmanship, it's competition, it's patting each other on the back, it's picking each
Yeah.
other up when you fall down. And if you're not having fun, eventually I'm not going to be having fun because I'm going to be dragging your ass in this race
Yeah.
rather than you
Exactly.
running alongside me.
Yes.
Yeah.
Yeah. I love that.
Let's talk about some mistakes, man. So, you know, as you think about leadership or as you think about entrepreneurship, you've mentioned some mistakes as it relates to hiring, but what other mistakes have you identified that you've made and how have you overcome it?
Yeah, well, we definitely have more mistake. We have the bucket of mistakes is larger than the bucket of wins as you know, talking about sometimes the shit show behind the scenes. Um, you know, I would say that a mistake that I had made, and again, I wouldn't do anything different because I learned from it, but is you start having success in one area of business. Usually it starts there. And for me, going from having no money to having plenty, um, I mean, opportunities open up. People want to work with you. They want to propose partnerships, ideas. Obviously, now you can make investments. And I look at the how scattered we got because that early on success kind of gives you this, oh, I can do anything mentality. And I believe you can, but you can't do everything at once.
Mm.
And so, like, at some point, I found myself, we have an insurance brokerage, we have a property management company, we have our real estate sales teams. At one point, I had a podcast, and the branding of the podcast, I was launching an energy drink line, and like all these different things at one time. And you just kind of look back and go, wow, if I would have kept all of my eggs in one singular basket, the one that was actually that got me to all those other opportunities, where could I be today? And so that's one is going deep before you start going wide. And everyone's definition of like what deep or deep enough is, that's going to vary. But if I could go back, I would keep my focus on residential real estate sales. And then maybe investments I make are passive. Now,
Mm.
real estate investments are far from passive, but they're for the most part passive. You can make them pretty passive. So I would invest in real estate, but outside of that, I would have kept everything singular focused on the real estate sales side. That's number one, first one that comes to mind. Um, I would say the second would be I would say the second is probably not hiring myself out of the business as quick as I did.
Interesting.
Um, yeah. I remember a point where I was praying that I could just have a purchase agreement, like praying that I could just get a deal. Please, God, if you're out there, like I need a deal to happen. And then I have five of them to write in one evening, and I'm so freaking tired, I don't even want to do it. I'm just like me and my business partner, like laughing, like, and I don't even want to write these offers. I really don't care. It's funny how things change. And I look back and I go like in my career, at least at the age I was, and even now, like there's something to be said for people who stay in the pocket longer and
Mm,
don't move on just so fast. And what I mean by that is not not necessarily like, oh, you shouldn't take the next step in hiring a CEO or like I'm not saying not to do that. I'm just saying in my position, I look and say, if I would have sold real estate for maybe a couple more years, those are the highest income producing years of my business. Why did I not extend those for as long as possible? I wanted to go the business owner route, which I'm happy I did, but I think there's also something to be said, like the next level doesn't always make more money. And so
mm.
like if you're in a service-based business, I look at production as like, well, I probably could have had a couple more $1 million in cash over a couple years if I would have stayed selling, but I was so dead set on I want to be the business owner, I want to scale, I want to go nationwide, and we're working on all of those things. But I just wouldn't have jumped out so quick as I did. I would have stayed in the pocket, making as much money as possible, while I could still increase it. And then once I got to a cap, where I'm like, okay, it's feasible to say, like, there's really not that much more juice I can squeeze out of this, me selling real estate, then take that next step. But I feel like if I go back and look, I probably had, it's probably 25% of my 100% that I could have been at for earnings in that role.
That is such a great litmus test because I'm sure a lot of entrepreneurs have bumped into this. Like, should I take that next leap? And to have the litmus test of, am I as good as I can be in this role? Like, am I at 100% or am I at 95%? And the effort to get to 100%, the juice isn't worth the squeeze, as you said it. But if I'm at 50%, then there's probably more juice in this squeeze and I should stay at this a little bit longer.
And exactly. And going to the third point is getting laser sharp on my P&L. Because
Mm,
here's what I learned in real estate. The dirty little secret about real estate teams is that people will be on stage, volume, units, total size of organization. But when you lift up the hood and you look at that P&L, it's ugly. It is
hmm.
not a profitable business. And so when I look back at like take all the external awards that we get for showing, we have people and units and there's people following us and branding and all that stuff. Take that aside and let's just look at what makes the most money. Chances are there's going to be some tweaks that you would make in what you're doing in your model when it comes down to P&L. So all of those things to end with getting laser sharp on that P&L from day one and making my decisions based on profitability, not based on ego or external validation from the marketing world, if you will.
That is so good. Rather than making a jump, look at the business and go, all right, how do I not focus on the gross? How do I amp up the net on this business before I make that jump?
Yep, and it's a long game. I go
Yeah.
back to like that's one of the reasons why we have that saying is like it's a long game and eventually time will tell all. So you'll know who was really working 5 years ago. You'll know who was really making money 5 years ago. Like you'll know at some point it all comes to light. And so it's a long game. Let's do it the right way. We have a fiduciary duty to the people who work at our company to make sure that we are able to stay in business. We owe that to them. So that's like what our main focus is that. All the other stuff is just a byproduct of what's profitable for the company.
Let me ask a follow-up question to that. So, how do you balance, building a brand and growing your company with and expanding into other markets, like you said, across the country, with actually running a profitable business? Like, how do you balance those things? How do you keep yourself in balance? What are the indicators that you might be getting out over your skis? How do you think about that?
Yeah, well, there's a lot of people who have come before all of us and have had massive success in our industries, and success always leaves clues. So first and foremost, on a P&L basis for a real estate sales company, there's only so many ways to dice that thing up. Like there's only so much variable of profitability and expense and cost of goods sold. Like there's only so much you can really do. And the unicorns are someone who has found something absolutely 100% unique to make a business more profitable at scale. So if you look at like, a real estate sales company, there's basic baseline metrics of cost of goods sold, fixed employment expense, what our net profitability should be. And we look at that to start is we have to make sure that every decision is going to back in to our economic pro forma. The second one, though, which is a little unique, but in our business, we look at agent net profit on a monthly basis because we look at it as if our purpose is to provide our partners with unlimited opportunities by making home ownership easier, faster, and smarter all in one place. If that's our true purpose that we believe in, well, what our agents actually make tells us if we're delivering on the
100%.
unlimited opportunity part.
Sorry, I was
Yep.
just saying 100%. I'm
So
just
we
agreeing with you.
measure agent net profit on a monthly basis, the average. That, oh yeah, sorry, it got a little choppy there for a sec.
You're
I
coming
think
through okay
we're
on
good
my end.
now.
You're good.
Okay. Cool. Yeah. So yeah, I saw that part. You agreed with that. Yeah. So when we think about that, like those are the two buckets, if you will, that we analyze to make sure any growth that we're having, any investments we're making, does it back into our economic model, and is it going to increase the monthly net profit that our agents are taking home on a monthly basis with our organization?
Yeah, what I'm hearing is have plate discipline, right? Like know which pitches to swing at, know which pitches not to swing at, and then have a metric by which will tell you you've gotten out over your skis because you're not running profitable anymore.
And you talked about building a brand. I think there's something to be said for proof over promise.
Mm,
There's a lot of promise out there. And so when we look at, well, yeah, you got to like tell people about your business and you need marketing and you need all, you need that brand awareness. I agree with that. But at the same time, the proof that your business is performing, that is your marketing. And I think that you'll notice there's been a shift in a lot of business where they're starting to get more transparent about what it looks like economically, what it looks like to be a part of this business, and they're sharing statistics and they're sharing data. And so the balance for us is let's use our proof as our promise. That is our marketing. It's almost like just let success be the brand, if that makes sense. Um,
100%.
so putting less emphasis on stroking our own ego, talking about how great you are, and like let's just let the results do the talking, but we got to make sure we tell people about the results as well.
It goes back to focusing on the net versus the gross. Like at the end of the day,
It,
yeah, very
that's it.
good. So we've talked a lot about morning routines and scale and I think personal development and now business. Let's transition a little bit into kind of like investment and wealth building for the last 15 minutes here. I know for me, I wanted to create a place where I wanted to get to a place where I'd escape the rat race, where the passive income exceeded my expenses and I didn't have to run the business anymore. Turns out I actually like running the business more, having escaped the rat race because the pressure's off. But how do you think about creating passive income and what are some of the things that you've done and you help the agents in your community do as it relates to growing their passive income?
Yeah, it's a good question. When I got into real estate, I thought everyone owned real estate. Like I thought all the agents had a bunch of rental properties and everyone had a portfolio and very naive. And I soon found out that that wasn't the case. And I asked, well, why? Someone took me aside one day and explained to me that, well, agents have money problems sometimes. Their commission and their income kind of fluctuates. This can create tax problems. This can create credit
Mm,
issues. And so they don't always fit into the traditional financing box. And someone taught me about seller financing, which is how to basically open up the traditional financing box where you can buy any property for any price in any market and only person that has to agree with you is the seller. And I like, whoa, wait, hold on, this is real. And that is one of the things, like there's a lot of different things we could talk about wealth building wise, but that is the one for agents specifically and business owners that I think is a slam dunk. Have to have this in your tool belt and know how to execute seller financing deals, especially in the residential space. But that is one of the ones that for me, 80% of my portfolio is seller financed. And I teach agents and business owners how to do that on a regular basis.
So walk us through that. Let's just go a little bit deeper and pull the onion back. When you're saying seller finance, are most of these all-inclusive trust deeds? Does their underlying finance remain on them, or what does that deal normally look like?
Ideally, I like no debt on the property. That's the ideal one.
Interesting. Okay.
Yeah, I like when it's owned free and clear. I will do a wrap. We call them wraps, right? Where there is an underlying note.
Hmm.
Um, my only hesitation with those right now is that there's been a huge push since interest rates went up with subject to seller
Yep.
finance. There's a lot of stuff going on. And, all it takes is Jamie Dimon to make one phone call, and we got thousands and thousands and thousands of notes called due because the due on sale clause technically has been violated for those properties. So it's an inherent risk we understand and we're cognizant of like, hey, like this could be a problem in the future. It's not today, but it very well could be. So we'll still buy those deals, but are more selective in that world. But a straight seller finance where there's no debt on the property, the most common situation we run into is a we call it a tired landlord, somebody who's owned this property for a long period of time. They're usually a little bit older in age. They love the money in, money out approach. So like they have 10,000 coming in, they spend five in their personal life, they have five left over. It's comfortable, but they don't want the headaches of the properties anymore. Now
Hmm.
there's some other tax strategy involved, but for the most part, that's like what it is. They don't want to deal with the property more, and they want the passive income still. And so, if you think about it, for this is more like non-super sophisticated investors.
Hmm.
They have a nice portfolio they've built over the years. They've worked hard. If they're going to sell you a house, they're going to net $500,000. The question always is, what are you going to do with it?
Right.
Oh, I'm going to put it into a checking account. Yeah, that's a great idea. Most people are outliving their savings. And so we're like, well, hey, instead of you having to go put that money somewhere else, I think that's actually more risky. Why don't
Mm.
you leave it in the property and let me pay you a monthly principal and interest return on that equity? It's safe, it's predictable, and worst case scenario is I am a professional landlord, I'm a professional investor, but if I don't perform, you take it back and you keep all the payments and you get your property back that you know and understand and can physically see it and touch it and drive by it. So this is the most common what we see in the really good deals that we like is that avatar, the tired landlord.
I can definitely see how that is appealing to someone that no longer wants to answer the calls, market the properties, do the background checks, all the things. So it's appealing for them. Walk me through like what does a typical deal look like, or one that you've executed on recently?
Yeah, so I always say there has to be a win in the big three categories. Otherwise, you might as well just go get normal debt. Like there's not a huge
Right.
advantage. We don't just do it to do it. It's only because there's a clear financial competitive advantage. And that's an interest rate, down payment, purchase price. Those are the
Yep.
three. The best deals we find a win in two of the three categories. But we'll still take a hard look at one. But either way, one of those has to be extremely appealing. So I'll give you an example of a deal we just bought like a month ago. Um, Property is 440,000 is what we paid for it. It's probably worth 440,000. Some of the upgrades they did maybe a little bit more, but like retail price.
So you
But
didn't win on the price.
I did not win on the price.
Yep.
It was fully furnished, paid off solar, remodeled, so all new appliances. I mean, super nice property. Great location. I own a couple of the rentals in the area, so I'm pretty comfortable what it's going to rent for. We bought that one with 4.6% down, and we got it at a 4% interest rate. And I also negotiated, we amortized it over 40 years opposed to 30. So, so the property is like, again, for 25 grand and this is straight up 25 grand because there's no lending fees or any, it's just straight up 25. We now have the property, and our monthly payment is roughly PITI all in like $2,000. And it's rented for 2,900. In today's market, that's a very healthy find. And so we thought we won. The interest rate was good. It wasn't great. 4% is good. It's just not like 3 or 2, but it's good. And then the down payment, I mean, to buy an investment property with no credentials, no nothing, no qualifications, 5% down. I mean, we're into that.
Slam dunk. Well, the thing that the other place you won is a 40-year amortization.
Yeah.
And some people might not understand how amortization charts work, but if I have a 7% mortgage amortizing and you run an amortization chart with the same loan amount at 7% versus a 4%, and you look at it, you're paying 2 to 3 times as much principal in the first 5 to 10 years with a 4% rate as you are compared against a 7. So you could take a 40-year amortization, which has a lower monthly payment and increases your cash flow, but the amortization, I bet you, is still greater each month in the first half of that loan than if you would have done a 30-year loan at 7%.
Correct.
So that's where that becomes a home run play because you're still chunking away at the amortization with the low rate.
Yep. And that's how we explain as well what you mentioned, that amortization schedule is crucial because if I just tell you, hey, Josh, I'm going to buy your property, I'm going to give you 10% down, 3% rate, you're going to hear 3% and your mind is going to go, absolutely
I'm
no,
out.
I'm out. But I'm like, wait. Let me show you the amortization though, because let me show you what the cash is of 3%. Decide off the cash. And so we do make a, we don't hide anything from anybody. The rate's the rate, but we always show them like, here's the actual interest based on the amortization schedule that you're going to be collecting net to you every month and every year. And if you hold this note for 10 years, here's the total interest I've paid you. And so the two bonus factors are amortization, you mentioned that, and then call date, right? There's a term. So we don't do anything less than 10 years. So this one I got for 10 years, which we feel good about, but typically we like to be in 15 or 30-year range on those. But those are also another key factor in the deals.
It's fantastic. Man, Ramon, you've given us so much to think about, man, on leadership, growth, creating long-term wealth. This is a great strategy to end on. If someone wants to learn more about working with you, your team, or just learn from you, where can they find you, my friend?
Instagram's probably the easiest place. Ramon.Casaus, super simple. Yeah, I'm pretty active on there.
It's great. Sure appreciate you. You've been a wealth of knowledge. I always know this is a great podcast when the time flies by so quickly. So thanks so much for being with us and sharing so generously today.